The next company that we're putting the spotlight on is Borosil Renewables. And you would remember, because we were chatting with the management just a couple of weeks back, talking about the need for more protectionist measures that India should perhaps take to deal with the dumping of solar glass that's happening in India from China and Vietnam. Well, guess what? Those measures have been announced by the government now, but are they enough? That's exactly what we want to understand. And we have Mr. Pradeep Kheruka, Executive Chairman at Borosil Renewables, joining in. Good morning, sir. Great to have you back on. So we want to keep it, very simple to understand what has been announced and to what extent it helps. I believe the value of imported glass is to be now kept at a floor price of $677 per metric ton. Tell us if this is the right interpretation and to what extent does it help you?
Thank you for having me. Yes, you're right. It is a floor price of $677 per ton. By and large, there's a little bit of variation depending upon which company is doing the export. But in principle, that is around the range coming from China. If it's coming from Vietnam, the price is a little more than $100 less in terms of the floor price. And I would say that this would go a long way in helping us to stabilize industry growth in India. I must say the government has been very proactive. It's been very sensitive. And the government has exhibited a great intent, resolve to ensure that domestic manufacturing in India is supported and grows rapidly. So this is definitely going to be helping the industry to grow.
All right. Hi, good morning, Mr. Kheruka. You asked for it, you have been rallying for it, and now you've got it. So that's good news. So tell us, how does business shape up? First, if you could tell us, out of the total solar glass that's consumed on a daily basis, how much of it is imported? I think it was some 30-40% approximately. You could give us the number out there. So that could come down. And domestically, can you go ahead and increase the solar glass price now, which in turn will help your margins?
So to answer your first question, the demand for solar glass has escalated rapidly. And right now, domestic production has been supplying about 30-40% of the demand. It is true that a lot of glass was lying in domestic manufacturers' warehouses, unable to sell because of cheap imports. And I believe that this duty is going to help domestic manufacturers be able to sell all that they produce. Even after that, there's going to be a big enough demand. And that is going to spur domestic industry to expand capacity. I just want to remind everybody that in the last time that anti-dumping was imposed in 2017, India had a capacity of 1 gigawatt of solar power, which means we had enough glass to manufacture solar modules worth 1 gigawatt annually. And within 5 years, this swelled up to 17 gigawatts annually. So the domestic industry and domestic entrepreneurs are not they're not going to be waiting around. The moment this has been announced, I believe that we're going to see a lot of money going back into production capacity. So that is one. And secondly, of course, this is going to be a big shot in the arm for existing businesses. There's no question about that.
That still doesn't answer our questions, right? Because if you could tell us what the current domestic price is with this anti-dumping duty, how much will you increase the domestic price by? And the inventory that you spoke about, companies were sitting on, how will they liquidate it at what prices?
The liquidation of the inventory is not a problem at all. We were selling at way below cost, and I think the prices will see some kind of a correction. We haven't yet decided what the new prices will be, but they will be they'll be better than what we were selling at, but it would still be below the cost of imported glass. I must point out that the cost of imported glass has already taken hold with effect from the 4th of December. All glass that is being cleared at much higher prices than even the prices that we propose to sell.
Right. No, you said that you are selling below cost. So just wanted to understand, what is your cost price and now how much above cost price will you be selling, and what does that do to your operational performance?
We are going to be approaching this cautiously. We are in no hurry to match imported prices at this moment. I'm talking about domestic industry as a whole. And we are looking at being responsible about it. We realize that some of our customers have booked orders at prices which have taken into account the old prices. And so we will not do anything to jeopardize their sales, their business. So we're going to be approaching this cautiously, but yes, over a period of time, prices will certainly firm up, and we'll have to wait and see exactly what levels they come up to, whether they match the import price or they remain a bit lower. That remains to be seen.
Okay. Mr. Kheruka, for your business, the consolidated numbers, now that this protection measure has come in, when do you go back to profits? Because at the consolidated level, I think there was a loss both at the PAT and at the EBITDA level. So when do you go back to profits? And now what is the sustainable run rate of margins that we can expect? I mean, I know that you're taking your time to decide on the immediate pricing action, but tell us, I mean, now that there is protection in place, what is the margin at which your business will operate?
Yeah, I cannot give any numbers on margins. That's not possible. But yeah, the margins will definitely improve. There's no question about that. And that's a factor of the prices. See, we are already manufacturing at pretty much flat out production in our company, and so therefore now it's an improvement in margins will come from higher prices. So
What's the aspiration, sir? I mean, I understand you can't give a number. That'll be a function of how much of a price increase you can take. But I mean, do you see the business going back to double digits? What are the timelines? And again, on profitability, by when does this settle? By when do you get back to full profits at the consolidated level as well?
See, at the standalone level, we should be back in profits in the next few weeks, I hope. And at the consolidated level, it all depends upon the German asset that we have. We are in some distress over there, in the sense that after the elections have been announced in Germany, there is no new measure coming out, and the markets there are still in disarray. So we are waiting and seeing how it turns out. So we have some exposure there, and we'll have to see how this evolves. But standalone, which is much bigger, we are doing 1,000 tons here. It's just 350 tons there. So if we are strong here, then it should be able to take care of whatever's going on in Germany.
All right, Mr. Kheruka, let's focus on the domestic business itself. And I'm looking at the margins. Maybe 2 years ago, your margins were 30-35% as well. Then they came down to almost 5%. But in the last few quarters, gradually improving. So that's good. Fair to assume, you don't give us a number, but margins will improve, right, from what you did in the last quarter, which was around 18% for the standalone business.
Yes, certainly.
So could we assume by quarter 4, once everything takes shape, it should be maybe in the mid-20s? That could be an aspiration of margins?
Aspirationally, yes.
Okay, all right, got that out of the way. And also, since whatever you produce now will be sold, there's going to be a fair bit of demand as well, and there's that import substitution. So what about the next capacity addition that you're looking at, and at what capex will it come at?
So the next capacity addition, well, to be very honest with you, we already started discussing it.
Okay.
However, as you are aware that we need board approval to begin with. I mean, in principle, we already have board approval, and we have announced it to the stock exchanges, but this was on hold. So we are reviewing the hold, and we're just examining the kind of steps we need to take to to ramp up capacity, and whether it'll be pockets of existing furnaces that we have, replicating those, or one very large furnace. We might go in for a situation where we'll replicate existing furnaces which are tried and tested, and the costs are well known and well understood, and probably more economic than going for a completely new design.
So what is the current capacity that you have, and what do you think you'll be adding on in terms of capacity? And if you could give us a ballpark number, if you're adding X amount of capacity, at what capex could it come about? Very, very rough numbers, a bit of a range as well. Capacity addition and capex at which it could come at.
I cannot say what capacity we will add. I can merely say what we are discussing, because all this will be firmed up. Yeah, we are discussing perhaps another 500 tons right now.
All right, you'll add another 500 tons. And typically, the prices that there are right now, I mean, you said that you won't take any price increase immediately. You'll be very moderate in that. Currently, the imports were close to around 28,000 rupees per ton. 56,000 per ton is what the government has indicated in terms of an anti-dumping duty. What are the prevailing prices in the market right now? How much of your capacity is locked at a certain price? And over, say, 2 to 3 years, how close would you get to this 56,000? Let's put it that way.
See, we typically sell about a month in advance. So December already. And So the price correction will start happening in sales from January, I think. Maybe some in December, the balance in January, and then it'll go on. I think by the end of March, we should be at a price which is stable and acceptable for us.
Which is closer to the $677 per ton.
This is something that you see. We work together with the consumers, and we will be in dialogue with them, and then we will see. We have no desire to make anything onerous for our consumers. We are very responsible in that way.
All right, we take that point.
All right, Mr. Kheruka, we'll leave it on that note. Thank you very much for joining in. Finally, some good news coming in for your industry, and hopefully in the subsequent quarters, we'll get more clarity on the pricing actions.